Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. We're so glad that you did, and we want to welcome all of our new listeners on. We're coming up on, I guess, almost 2 years now on the CSN network.
Yeah, it'll be coming up on that, Shana. That's cool.
Yep, in short order, and our newer audience on NRB TV. So
yeah.
Welcome. If you're listening for the first time, we hope that you're going to keep listening and find out how our program, this ministry, can help you to be someone who defunds darkness, to clean up your investment portfolio so that you screen out the companies that are funding the dark agenda in this world, like abortion, pornography, the LGBTQ agenda, so on and so forth. I know that was a mouthful, but keep listening if that was the first time you've heard it. And also to fund the light, to be a joyful, generous, and obedient giver, and continue and be part of the work that the Lord is doing in the earth. We hope that you'll find out more about becoming a partner of our ministry so that you can get access to our biblically responsible investment strategy by going to financialissues.org. On today's show, a lot on deck for you. Our phone lines questions, get your calls in early. 610-363-1110 is the phone number. If you're listening live, we do understand that a good bit of you listen at a time when the show's not live. But if you're listening live, 610-363-1110 is the phone number. We'll also get to the latest economic headlines, which is what we're about to do right now, including unfolding developments in the AI race and the impact of the Fed's interest rate decision yesterday. Well, that was the big news of the day. The Fed voted unanimously to hold the overnight lending rate at 4.25 to 4.5 for the third meeting in a row. They do meet about every 6 weeks. After bringing that rate down 100 basis points, that's a whole percentage point, between August 31st and December 18th of last year, ahead of the election and one little one after the election. Powell communicated his belief that we are in a very strong economy and a solid labor market, with disinflation continuing on a, what he called, slow and bumpy path. And it sure is a bumpy path. Let's put up image one there. We've got, this is headline PCE, which is the Fed's preferred, or one of the preferred measures of inflation, PCE. And headline PCE, Powell said that is what people feel. He acknowledged that because it includes food and energy, and indeed it has had a bumpy path in the last year. Starting, if you're watching on the screen, you can see it started the year at a 2.7% annual rate a year ago. It bumped up to 2.8%, fell all the way to 2.1% in September of last year, and now appears to be heading back up at 2.4%. That is, until we get the number tomorrow. So still has a huge inflation hangover from Congress's drunken sailor spending that was only escalated by the pandemic. Prices are now 20 to 50% higher, depending on what you're looking at, with the only consolation being that at least prices aren't going up as fast as they were in 2021 through 23. Core inflation, Powell said yesterday, is a better indicator of future inflation. Okay, let's show image two and get an idea of where future inflation is going. So core has fallen from a rate, that's an annual increasing rate of 3% to 2.8% in the last year, stalling out from the downward trajectory that it had when it peaked out 5.6% in March of 2022 to the 3% pace that we saw at the beginning of this year. 3% down to 2.6% annual rate in June of 2024, and now heading back up to 2.8%, or whatever the new number is tomorrow. It is expected to be unchanged at 2.8%. We'll see. Powell acknowledged that the The neutral rate is meaningfully above neutral at 4.3%. He added that he believes that the policy is restrictive, that is, monetary policy is restrictive, and that they are therefore not in a hurry to make further adjustments to the overnight rate. Powell clung to the notion that the Fed is politically independent, and he iterated, don't look for us to do anything else. Don't look, because you might accidentally think about that independently on your own and actually come to your own conclusion that there's no way that the Fed is actually non-political. But he did do a good job, that is, Powell did a good job dodging the political questions. He was asked several, and refused each time to answer questions about Trump's executive orders and the OMB actions. So the Fed is officially in wait and see mode. So what will they actually see? Is this really a strong economy? Well, just this morning, we got a revision to fourth quarter GDP down to 2.3%. The economy is growing. The U.S. economy is growing at 2.3%. That is less than the 2.5% in the previous number. So it's been revised down, 2.3. 2.3 is not a really strong growth rate for an economy. Make note, make a mark. This is where Trump is coming in. Okay, so we're already, I don't believe, in exactly the strongest economy that we could be in. We got unemployment out this morning. The significance there, 1.9 million in continuing claims. This number has steadily been heading upward, indicating that we may not be in exactly a stable labor market that the Fed, or the current numbers tend to indicate to the Fed that we are in. Inflation's heading back up as well. Powell was asked about quantitative tightening. That's where they are allowing debt that they have bought from the federal government to roll off their balance sheets. And he says that there is still abundant liquidity, and that they still do intend to reduce the size of the balance sheet. So what about the impacts? What about the impacts to the housing market? Well, he was asked about that too. Mortgage rates have gone up 100 basis points, while the Fed mortgage rates have gone up to more than double, or almost double at some point, since the Fed has cut 100 basis points. So you would think that the opposite would be true. As the Fed is cutting rates, everyone has expected mortgage rates to come down. They have not. Longer rates have gone up. And Powell said, well, that's unrelated to our policy, and it's mostly a term premium story, but it will hold back housing activity. Powell did acknowledge that, because Powell said we only control the overnight rate. So mortgage rates don't actually follow the Fed's benchmark short-term overnight rate. Instead, they tend to move in tandem with the yield on the 10-year Treasury note, which rises when investors see inflation rising in the future. So with mortgage rates stuck around 7%, we can't really expect to see housing supply increase from people selling their existing homes because of those golden handcuffs. We're not going to see people trade in their 3 to 5% mortgage for a 7% mortgage. So rather than home inventory, the home inventory would be more dependent on new builds if people aren't selling, and home builders are really under pressure. So the thing that will bring housing costs down is more inventory and supply, but builders are not highly motivated to do that because they're having to spend a lot of money just to push just to move their products off the market, because they're having to buy down mortgage rates. So lower rates, which won't come until inflation is under control, and that won't come until government spending is under control. And a stall out, we also need a stall out in insurance rates and property rates, which are also driven up by rising home prices, which are driven up by lack of inventory. Vicious cycle, I know. So Powell knows it. He acknowledged it in the press conference by saying, quote, I think the higher rates will probably hold back housing activity to some extent if they are persistent. We will have to see how long they persist. So, since we aren't very optimistic of getting back to the 2% in short order, why don't we just change the 2% inflation target rate? Well, Powell was kind of asked something in regards to that. Powell says the 2% has served us well over the long term, and it is the global standard, so we won't change the goal anytime soon. He said, we'll know the neutral rate when we see it. So what do the markets think? Well, we've got an image to put up there, and you can see this is just a chart from the S&P 500 yesterday. You see that sharp dip right there? Well, that was when Powell gave his remarks. The FOMC canned statement seemed very, very hawkish, meaning that the market interpreted the 100 basis points that we were expecting in cuts this year probably aren't coming. It also caused an initial shock in the bond market, but you're going to have to hang on until after the break to hear the rest of the story. So we got to take a break right now. Our phone lines are open. 610-363-1110 is the phone number. I'm your host, Shana Burt. We'll be back with more financial issues.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing, including the potential loss of principal.
We believe in being faithful stewards of what God has entrusted to us. And nothing is more important than investing in the next generation. The most impactful way to do this is by sharing the message of Jesus with young people. Crossroads Kids Club is an after-school program that brings the gospel to elementary school children in public schools nationwide. Together, we can make a lasting difference for the kingdom. To learn more and join the movement, visit reachOurschools.com. Again, that's reachOurschools.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back to Financial Issues. So we're talking about the Fed meeting, the Fed announcement, the Fed meeting yesterday, and how it impacted the markets. So initially, the press release, the canned statement caused the market to drop off pretty sharply, and it caused the stock markets to drop and Treasury yields to rise, and that happens because the stock and the bond markets were interpreting what the canned statement was saying as very hawkish, meaning that rates will probably stay higher for even longer than what was expected prior to the release. Now, President Trump was not pleased with the decision either. In Davos, he called for interest rates to go down immediately. And he took to Truth Social. Trump took to Truth Social, where, by the way, you can also find Financial Issues and follow Financial Issues on Truth Social. If we can, let's show image 4. This is Trump's response on Truth Social. He says, because Jay Powell and the Fed failed to stop the problem they created with inflation, I will do it by unleashing American energy production, slashing regulation, rebalancing international trade, and reigniting American manufacturing. But I will do much more than stopping inflation. I will make our country financially and otherwise powerful again. The Fed has done a terrible job on bank regulation. Treasury is going to lead the effort to cut unnecessary regulation and will unleash unleash lending for all American people and businesses. If the Fed had spent less time on DEI, gender ideology, green energy, and fake climate change, inflation would have never been a problem. Instead, we suffered from the worst inflation history in our country. So, I agree with Trump in what he said about the Fed has no business involving itself with DEI, climate change, or energy policy. I always just had to roll my eyes so hard every time Powell was asked about those things in the press conferences, and he tried to give the, even though they're non-political, the politically correct answer to all of that. But you know what? The Fed's mandate at the end of the day is price stability and full employment. So the Fed is tasked with two things: keeping inflation under control and keeping the labor market strong, keeping conditions to where it's conducive for businesses to keep and to hire and keep employees. But you know what? I do disagree a little bit with that statement, because we can't put all the blame on the Fed. The Fed was just the enabler of inflation because they bought all the debt that the U.S. government was irresponsibly issuing because of spending. Congress and the Biden administration has an equal, if not greater, part in the problem of inflation. Spending has long been held at about 17% of GDP. So GDP measures the output of our country, the growth of the American economy, and spending has traditionally stayed around 17% of GDP, and that has seemed to be somewhat of a sustainable level. But now we're seeing spending at 21% of GDP since COVID, and we're on track, if we continue the spending that had been happening, to be at 25% of GDP spending at 25% of GDP in short order. So what does that mean? It means that we're spending at a far greater pace than what we are growing. So think about this on a smaller scale. If you get a $5,000 raise for the year, does it make sense to commit to increasing your household spend by $8,000 a year? Spend everything that you got in increase plus some? No, it doesn't make sense. So if it doesn't make sense for us, it doesn't make sense for our government. So it would have been smart, maybe a little bit smarter, for Trump to add comments about DOGE and his efforts to reduce spending. I think that would have gone a lot further with me anyway. But that is the thing that will significantly impact inflation in a positive way. That meaning reduction in spending. So the markets ended the day yesterday in the stock markets in negative territory. The Dow was down 0.33%. The S&P and the NASDAQ were down almost 0.5%. This morning, is a mixed picture. The S&P and the NASDAQ are set to open in positive territory, with the Dow slightly down. Now, yesterday we had several technology companies. We had Meta, Tesla, and some others report earnings after the bell. So that tended to be the news that moved the markets after the bell. Meta gained nearly 2%. And Tesla gained about 5%. Microsoft shares dipped 4% after all of the companies reported earnings. Now, both Meta and Microsoft beat on the top and bottom lines, but Tesla missed expectations. They missed earnings and revenue, top and bottom line, but their stock was up 5%. So what happened there? Well, Tesla was up in spite of that miss on the top and bottom lines, and an 8% drop in automotive sales as the appetite for EVs is really getting squashed. They were up because they had a $600 million bump to their net income due to a change in how companies have to report their digital assets. So apparently, Tesla's Bitcoin holdings did very good, and they had a $600 million bump to their net income. Even more proof that Elon Musk is a smart businessman, and he's going to find a way to make money even when the demand for his product is waning. Meanwhile, NVIDIA has had a pretty rough go of it this week, selling off in their stock about 13% since the Deepseek news on Monday. So it was up more than 1% yesterday after hours, and the company's the emergence of Deepseek. Now, Deepseek is not new. They just released a new model, and basically they came out and said that this is China's version of ChatGPT AI, and they basically said that they can do it better, cheaper, and with less energy than U.S. companies. So the market has been digesting this news this week, with a lot of the AI darling stocks giving up market cap. But I think the trajectory for AI has changed, but not much. So AI is still happening. It's still moving forward. We still need more power. It's still going to create more efficiency and more productivity by the companies that adopt it. But it's just that NVIDIA won't be the only beneficiary, but they are still the clear leaders. So there's news out now that Microsoft and OpenAI are investigating whether Deepseek's product was just a modern marvel of reverse engineering, as a lot of China's innovation does seem to be. And there's information even out now that Deepseek makes the same mistakes that OpenAI's first release did. So that seems to be more evidence and support that, Deepseek may be sort of a deep fake, or not necessarily a deep fake. That's just a nice play on words, but it does look like it did use information from OpenAI. And, that totally would make sense that they used a lot of they're calling it, but, if it makes the same mistakes that OpenAI did with cheaper and more or less sophisticated chips, it would seem to stand that they did copy. So AI is still in its infancy. It has a long way to go before it can really even be a trusted source. I keep hearing more and more information. And my own personal experience with AI, mostly with ChatGPT, is that it's still learning. It's really probably in grade school. It's got a long way to go before it finishes high school and gets into college and can really be a trusted source. So, my caution is that if you're using AI, check it out, play around with it, but test the waters, make sure that the outputs are true. So, my opinion, human beings are still smarter. We still have a lot more knowledge, and we have connection to, as Christians, the maker of everything. So AI is learning from us, learning from large language models, from all of the information that's out there on the internet, and AI doesn't have a connection to the creator of the universe and the source of all wisdom and knowledge. So,
amen. And Shana, maybe if you're a pastor listening out there, maybe don't use AI to write your sermon, please. Use the Word of God. I've heard some stories about pastors using AI to write their sermons. That's not a good idea. Anyway, sorry, I didn't want to derail you there.
All right. You know what? Do we take the call, or do we go to?
I would be inclined to see if we can get to Adam quickly, Shana. I don't know what you think about that. You want to give it a shot here and see?
We can try it.
All right,
we can try it.
Let's do it.
All right, let's do it. All right, Adam, you're live on Financial Issues, and we've got about 2 minutes to get it done.
Oh, that should be more than enough time. Good morning.
Good morning.
Quick question about mutual funds. I think I know the answer. Just looking for you to confirm. Of course, there are fees associated with buying, at least the front load mutual funds, and certainly fees to hold them. Is there a way to think about evaluating or strategizing moving out of mutual funds, or you just take that hit and just move on to greener pastures? What are your thoughts?
I guess it depends on the reason why you want to move out of the funds. If you're building a portfolio, what I think is that even if you're in the investment model, some funds are still in our model because we use the fixed income funds, we use the international funds because it's harder for us to do due diligence from a biblically responsible investing standpoint. For the international, for the fixed income, it's hard to really build a fixed income portfolio out of individual securities just because of the nature of how they are. So what I would say is if you're building your portfolio and adding money into your portfolio, maybe you just want to start exchanging. Once you buy into mutual funds, you really want to have a long-term holding period because of the cost associated with it. So I think they're still going to be part of our models. Maybe you just exchange and shift around, and as you're adding new money in, maybe you just put that new money into the other places rather than trying to get out of the mutual funds.
Okay.
All right. Great.
Thanks,
Good
Adam.
stuff to think about. All right, folks, we are coming up on a break here. We didn't get to our stewardship verse of the day. We'll see if maybe we can get to it in the next segment, because it's always important to stay grounded in the Word of God and the truth of God. So if you are listening on an outlet that only carries a short version of the show, we hope you know how to get the long form. So that's going to the website, financialissues.org, making sure you have our phone app where you can listen to all live and past shows of Financial Issues, and on podcast, Apple and Spotify, where you can speed it up or slow it down as you're accustomed to listening. For everyone else, stick around. We're going to be back with more Financial Issues right after this.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
So I was just getting on my feet and I met someone and I got pregnant and I wasn't ready. How am I going to raise a baby? And I barely can take care of my daughter and myself right now. I Googled abortions and I scheduled an appointment thinking it was an abortion clinic. When I was at the clinic, after they told me how far along I was and that the baby had a heartbeat, I cried. And it gave me a minute by myself in the room. I broke down and I prayed to God. I asked the Lord to, when I walk out of those doors, to just give me the strength to be able to go through the pregnancy. I made my decision at that time. I'm super grateful that I'm able to go down this journey with my daughter. And I'm just super glad that I didn't have an abortion. I've learned how to trust God. It feels amazing.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachourschools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Well, welcome back to Financial Issues, folks. Great to be here with you all today. I got to tell you, you got to log on to the chat today. I've never laughed so hard on the live show than some of the comments that I'm reading in the chat right now. I had to mute my microphone in that last segment because they're just so funny.
We need a spin-off show that just focuses on the chat because they're wild.
That would be, listen, we're talking about Deepseek earlier, Sam. That would be a deep dive into the bowels of FISM. But anyway,
that'd be Financial Issues After Dark.
That's right. It sure would be. Yeah, we would have some fun with that. But it's good to be here with you all, folks. Sam and I will be taking you the rest of the way here. I do hope you check out Shana's commentary from earlier this week. She did put that out. I know we mentioned it yesterday, but if you haven't gotten a chance to read that, go do that after the show today. Also, we do have Bible study tomorrow. I hope you'll join us. We'll be in Daniel 2, 19 through 23. If you are a partner, you can catch the previous Bible studies. I know that's meant a lot to so many of you. So I do appreciate you letting us know about that. That is available for you now if you're a partner. Folks, we haven't mentioned this yet here, but I would urge you all, please pray for the victims of the terrible plane crash that we saw early this morning, I believe it was, over the waters of the Potomac in D.C. Latest number I saw was there were 64 people who this morning, I believe, were all declared dead. So that was 60 passengers and I think 4 crew members as well. And I'm not sure, Sam, if that included those who were flying the helicopter that crashed into that plane.
I'm not sure either. I was tempted. I was doing that for the headline below on the ticker, and it wasn't clear to me how many were actually killed overall. I think it was 64 on the airliner, right? And
I think so. I think it was 64 on the airliner. I don't think that's including
what happened with the helicopter.
Yeah. So just, boy, it's just a horrific tragedy, folks. And it's something that has not happened in a long time. I saw it was over 2 decades that the last kind of airborne tragedy like this has happened in our country, which it's good that it's been that long. When something like this happens, it just really hits close to home. So pray for the families.
Makes it all the more shocking because we're not used to it. I mean, thank God that we're not used to it, but it's just devastating.
Yeah, absolutely. So there's absolutely, a need to be praying and, understanding that God is near to the brokenhearted for sure, I think is really good. But just a horrible tragedy. So be praying for the family members of those victims for sure. Well, Sam, let's get to this here. We heard Shana mention this briefly in segment 1, but I know Fed Chair Jerome Powell had a couple things to say yesterday. Can you tee that up for us, Sam? What did he have to say?
Yeah, today's Fed Day, right? We're recapping. If you listen to the first half of the show, we're spending a lot of time recapping what's going on with the Federal Reserve, their decision to keep interest rates steady. So let's hear from the man himself, Jerome Powell, what they decided yesterday.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
So there you go, Seth. And my understanding is, despite this being widely anticipated, the markets were not too happy.
They didn't seem to like it. Yeah, Shana had mentioned that yesterday. Kind of the whole day yesterday, they were a little bit down. Of course, we've seen a pretty chaotic week this week, folks, with Deepseek earlier this week, and then we had a good day, and then yesterday they were just waiting for this. And so, as Shana said, the markets closed negatively yesterday. Dow and the S&P were both right around 0.5%. The NASDAQ, not as bad. It was down about 0.3%. The markets have just opened, folks, so let's see what they're doing right now here. All 3 indices in positive territory, moderately so, but positive nonetheless, as the Dow Jones is up about 0.1%. The S&P 500 is up about a third or so, and the NASDAQ up about 1/4. So we'll see if they can kind of maybe gain control of their emotions a little bit. That's a tall ask for the markets to gain control of their emotions, but we'll see if they can try to do that nonetheless today, coming off the aftermath of that announcement as we saw yesterday. All right, Sam, we got a good question that came in the chat yesterday that has to do with the markets and kind of the emotions of the markets. So you want to tee that up for us?
This is a great question from John from Jameson, Alabama, and I think pretty relevant to what's going on today. He said, why is the definition of a quote-unquote long-term investor in the stock market only 2 years? What do you think, Seth?
Yeah, John, that's a great question. So here's what I think it is. The perspective of many investors in the stock market is much more short-term. You have a lot of day traders. Even without day traders, you have a lot of people who do investing in the non-BRI way and in the non-long-term way. Now, there are some long-term investors to be sure, but I think a lot of people get into it and they get really excited. And so because, they get really excited, they think, okay, you know what, I'm going to make a quick buck here. I've seen these stocks going up. I'm just going to pull out and take my gains. And look, that's fine. Like if you want to do that, knock yourself out for that for sure. We believe that's not the right way to do investing, and that's actually not the way that the Bible really speaks to us about it. We talk about wealth growing little by little. The reason why in the stock market 2 years feels long is because everybody's doing it short term, or at least a lot of people are. So for them, if you're in it for 2 years, man, that's like a lifetime. For us, that's like the blink of an eye. I mean, that's at the very least, that's only a quarter of the time that you should be spending in the market.
We're talking about getting started.
Yeah,
just getting your feet
exactly
wet,
right. You're a baby. I'm not saying that in a derogatory way. I'm saying you're young. 2 years is not a long time. We're talking about a lifetime here, folks. It's think about it this way, John. It's a lot like someone saying, "I've been married for 2 years." Boy, that's a long time. I've been married a long time. No, you haven't. You're still in the honeymoon phase. You've got a lifetime with this person. You're thinking 50 to 60 years. 2 years is nothing. So I think in the markets, I think that's why it happens, because there are so many people who do it short term. 2 years does feel long. And folks, you got to remember that long-term strategy, you're not in it to make a quick buck. You're in it for the long term. That means you're going to go through the ups and downs for sure, like we've seen this week. Your target, again, the floor is 8 years. Really, the sweet spot is we're talking 10 to 15 or more, 10 to 15 years or more. And ideally, if you start investing, the hope is that you're doing this pretty much for the rest of your life. It's going to look different, of course, if you're a younger investor. By the way, that's why we offer some of the models that we do, more of the growth model, where it's a little bit more, you take a little bit more risk, and then as you get older, it's more sustaining, but you're still involved. You're still in the markets. You're still investing. The goal is that you're doing it for your whole life. So, John, I do hope that's helpful there. I think the definition of long-term in the stock market is 2 years is because there's so many people who do it short-term, and 2 years feels long to them. We know it's not. We know that's actually very short, just a drop in the bucket.
It's really important to note, Seth, too, that the people who are successful at short-term investing, there's not a lot of them. Yeah. And the ones that are successful, that's basically their full-time job.
That's exactly right.
They're doing that all the time. They're not just casually investing in their market. These guys are really committed to this. And my guess is if you're listening, that's probably not you.
Probably not. It's probably not you. If you are doing that, please feel free to let us know. Sam, I can remember Dan used to talk about how he knew a couple of full-time day traders, and he said like they were really good at what they do. It is a full-time job, and they're always doing it.
They see major dips too. So
yeah, that's exactly right.
There is a strong element of risk. It's kind of gambling in some ways.
Yeah, it's very similar to that. You're exactly right, and that's part of the reason why we would caution you against it. The question of is it morally wrong to invest in the short term? Probably not, but it's probably not wise. It's probably not wise, what we would say. The wise way to do it, the right way to do it, and the way that we believe lines up with the biblical definition of wealth gaining is to do it long term. Wealth grows little by little again. So, John, it's a great question there, and I do hope that was edifying to other people as well. Just seeing that definition of what long term truly is. Shana did mention quickly we had a couple of earnings reports that came out yesterday and the day before, actually. Boeing really did not do well. Microsoft and Meta seem to be hitting more kind of what had expected there. So we're seeing, and actually Tesla also came in as well. So we saw those earnings reports, of course. We got the ag report coming here, folks. We'll hear from Craig Haugaard, and then we got more headlines to get to coming on the other side of this break. You don't want to miss it. We'll be right back after this.
This is Craig Haugaard with your Financial Issues Ag update for January 30th. In the corn market yesterday, it was a very big day for the funds as they aggressively added to their long position. And ad buying saw very little selling from the U.S. farmer to offset it. As a result, corn made fresh 8-month highs, with March corn finishing the session 11 3/4 cents higher at $4.97 per bushel. South American worries once again pushed soybeans higher. Funds were the buyers of about 10,000 contracts during the session, largely on the news that 70% of Argentina's bean crop is going to receive less than half of normal rainfall over the next 10 days. As a result, March soybeans were 15.5 cents higher at $10.60.5. Wheat was pushed sharply higher by fund short covering. The fund buying seemed to be driven by spillover strength from the row crops and concerns about the condition of the Russian crop. Minneapolis March wheat finished the day 16 cents higher at $6.13 3/4. Kansas City rose by 19 1/4 cents, finishing off the day at $5.80 1/4 per bushel, and Chicago was 17 1/4 cents higher at $5.62.5. Cotton futures just continue to trade sideways. At yesterday's closing bell, we had March futures down 32 points as they ended the session at 66.66. Livestock futures were mixed. April live cattle futures were $2.32.5 lower at $204.95 per hundredweight. March feeder cattle dropped by $2.97.5 as they settled at $275.27.5 per hundred. And our April lean hog futures were 42.5 cents stronger, closing out the session at $91.32.5 per hundredweight. Class 3 milk futures took a bit of a breather after its latest run. We had February futures down 5 points at 20.34. This has been Craig Haugaard with your Financial Issues Ag update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Hey folks, welcome back. Good to be here with you today. We're having fun on financial issues for sure, trying to give you the news that you need to know for sure to help you be a biblically responsible investor. Of course, as we mentioned in that last segment, we are in this for the long haul, folks. So if you're listen, if you're a short-term investor, if you're a day trader, our strategy is probably not the strategy for you. You'd probably do much better either changing your strategy, we believe that, or trying something else. else. So if you're willing to stick it out, if you're willing to do this for a long time, I think it would work great for you to consider becoming a partner. So you can do that, financialissues.org. You can check that out today. Hey, Sam, let's get to another good question we had yesterday from Ann on the chat.
Yes, sir. Let me pull up Ann here. Ann is asking, is John Deere still moving manufacturing jobs to Mexico?
And that's a good question. We did a lot of research on this yesterday and today, both Sam and I did, and we found conflicting reports on this. Now, what it seems like we found, Sam, is that some of their manufacturing is in Mexico, most of it is in the United States. That's the big, general, broad answer that I've gotten. Do you want to fill in some of those gaps there, Sam? Am I correct on that?
Yeah, so my understanding, right, is that they produce most of their stuff in the United States, assemble it at least. Last year, they were moving some of their Midwestern factories down to Mexico. Donald Trump then challenged that, said he was going to tariff John Deere. He also made it kind of sound like they were moving all their stuff down to Mexico. That wasn't necessarily true. That's just kind of the way Donald Trump talks. He exaggerates and talks in these big ways. And then there was kind of a confusion if John Deere was actually backing off because of that or not. For right now, it doesn't appear they're changing their mind. But, you know, with Donald Trump's tariff policy, there is a real possibility that could change. But for right now, it looks like at least some of their plants are moving down to Mexico. But like I said, it's not all of them.
So, Anna, I hope that is helpful for you there. There's a couple things we have to consider with this, and I don't want to assume that this is behind your question, Ann, but I'm guessing it might because we've seen this question or comments like this come up before. As you all know, I'll give you a little peek behind the curtain if you're not a partner, that John Deere is on our broad list right now. It's not on our buy list. So, Ann, if you don't own John Deere, it actually shouldn't impact you at all because we wouldn't want you to put money into it anyway. We know that many of you do. But I think it's really important for us to just remember that maybe the reason this is on our mind so much is because this news broke, it was about 4 or 5 months ago, right around the time where we were doing our petition with John Deere because they had revealed that they were getting into the DEI stuff. And then they, thankfully, by the grace of God, they turned course and they said, we're not going to be involved in that anymore. And so that was a great win for us. But my understanding is that didn't impact their choice to manufacture their products strictly in the United States. Now, I want to give you some words of comfort here to know that, look, I would love for all companies, you know, if they're American companies, I'd love for them to be American made, American manufactured, creating American jobs. I think that's really good. I don't think it's morally wrong for a company to have plants outside the United States, you know. So that's not a BRI issue. You can breathe a sigh of relief there for sure. But I do think it's something just for us to consider. There was kind of a timing issue with this, that both of those news headlines were happening at the same time. One of them went in our favor. The other one is kind of still up in the air. So, and as Sam said, I do think that this story is not over yet with John Deere as we see these Trump tariffs, as we see kind of the dust settle from them and we begin to make more sense of them. I think we'll have more of an answer here to see that. Am I making sense there, Sam? You think that's true?
Yeah, I think that makes perfect sense. And again, even if with the tariffs they decide to make some of their stuff to Mexico, that really doesn't affect us as far as a BRI perspective goes.
That's exactly right.
You might have opinions about what you want for the country and what you think is best for the company, but as you said, that's not really a moral issue.
Of course. Yep, absolutely. And I think that's important to remember, folks, that just because it's not a BRI issue, it doesn't mean that we can't have an opinion on it. It doesn't mean that we can't, do what we can to fight against it. You know, we talk often about that when it comes to the question of stewardship versus patronage. You know, we believe that there are certain companies that it might be okay to shop at, but maybe not okay to invest in because it's a stewardship versus patronage issue. A lot of this, though, Ann, I do think comes down to your conscience. And so if it bothers you enough, I don't think there's anything wrong with that. I think that's the beauty of this strategy is then it's up to you to be able to make that decision to say, all right, I'm not going to invest in this company, even though it's technically not violating any BRI, standards. So I hope that makes sense.
Yeah, there's a reason why we have a variety of companies in each sector. You can make your own choices. And if one of your reasons, hey, I want this company over another is because they're doing something with their trade policy or where they're building their stuff, that's up to you. That's your prerogative. And good for you for being informed on these things.
That's right. And I would actually, Sam, you're exactly right. I would encourage that, Ann, and for all of you, to be doing your own research and to be going by your conscience. We're here to help you and to hold your hand and to teach and to guide you. But really, it does come down to your choice. There may be stocks on the buy list that you may choose not to buy, and that's okay. And it might simply be a financial decision. You might be already perfectly weighted in that sector, and so there's no need to buy other stocks. You may have a conscience, you're maybe you have a check in your spirit, where you think, what, I just can't bring myself to buy this company. I'm not going to condemn other people who do. I know that it's still biblically responsible, but I just can't do it myself. That's totally fine. We want to give you the freedom to be able to do that with this strategy. So, and I know we've had a lot of successful people who have done it that way. So that's great stuff there. Okay, Sam, interesting headline here. Kind of a follow-up to what Shana had mentioned earlier about OpenAI and Deepseek, and the question, did Deepseek steal their ability to do AI from OpenAI?
Yeah, did they kind of rip it off? Would it be a shock of shocks to learn that China ripped something off? So
I don't think so.
To recap here, the markets were all in a tizzy about this new AI platform from China, Deepseek. They were saying they made it for just $6 million and in only a couple of months, and the question is, oh my gosh, how on earth were they able to do it? Well, one of the reasons they might have been able to do it is because they basically taught their AI system to cheat off of OpenAI's system, and that's something that White House AI czar David Sachs talked about on Fox News earlier this week. Here he is.
There's a technique in AI called distillation, which you're going to hear a lot about, and it's when one model learns from another model. Effectively, what happens is that the student model asks the parent model a lot of questions, just like a human would learn. But AIs can do this, asking millions of questions, and they can essentially mimic the reasoning process that they learn from the parent model, and they can kind of suck the knowledge out of the parent model. And there's substantial evidence that what Deepseek did here is they distilled the knowledge out of OpenAI's models. And I don't think OpenAI is very happy about this.
I can imagine they're
Probably not. Yeah, right.
Yeah. So you think we can breathe a sigh of relief, right? Well, not really, because that means China now has this rather sophisticated AI model that they can use for whatever purposes they want, perhaps build new models. And, Sachs later goes on, I think that the United States has gotten complacent about AI. We've been thinking, hey, we're the top dogs here. No one can beat us. And he says, we need to get our act together and get on this. This is not just serious for the economy. It can be deadly serious when it comes to warfare and other things like that. So here he is talking about that too.
I think that our AI companies got a little distracted, to be honest. I think that maybe they got a little bit complacent. They didn't realize how close these Chinese companies were to them. They wasted a lot of time on things like DEI. You saw there was like woke AI. They were, the models were basically producing things like Black George Washington. And I think that when you're complacent and you think that there's not global competition, you can indulge in those sorts of things. But now that we know how close this race is, like I said, Deepseek now has a model that's comparable to OpenAI. OpenAI is on the next model, but again, they're only maybe 3 or 4 months ahead. We just can't afford to get distracted by things that don't matter.
Yeah, there was a reason why President Trump said this should be a wake-up call for Silicon Valley, and let's pray that it is.
I think so, absolutely. Boy, that's an interesting twist and turn there, Sam. I think it is safe to say that we are officially, if anyone didn't think this already, we are in a Cold War with China. I mean, this is the equivalent to the space race with Russia, to the arms race. This is the new arms race. AI is really kind of the new arms race. And I hope this can be a wake-up call, Sam. You're exactly right.
I know. I saw people saying it was the Sputnik moment with Russia, but with China.
Yep, that's exactly right.
You could compare it to that.
Yeah. And it's so fascinating. It's kind of got lost with... I think part of it was because when Donald Trump came into office, we all breathed a sigh of relief and said, okay, we can see an end to DEI. But let's not forget, American AI was riddled with woke nonsense. Black George Washington, that's exactly right. I have a newsflash for you folks. George Washington was not black, even though these AI models revised history and said that he was. And there were many other things like that as well. That's not very good AI if it's telling you something that did not happen in history. And I can't help but think China, just picture this, Sam, you think China's using AI to rewrite history by making, think about some of the great emperors of their dynasties throughout the Middle Ages, the different dynasties like that. Are they making them black or indigenous, this AI?
I can promise you they aren't. But I can tell you, Seth, that they are rewriting history because this is communist China.
Yeah, absolutely.
The famous thing making the rounds right now is that if you ask Deepseek about the Tiananmen Square massacre, it might start to give give you an answer and then quickly say, oh, wait, nope, I can't do that. No.
So it's just a reminder, folks, that AI is not all-knowing. AI also is governed by the humans that created it. And I think that's part of the reason why we have to be, I made the joke earlier in the show about pastors using AI to write their sermons. Please don't do that if you're a pastor. Please use the Word of God and only the Word of God, as well as your intellect, perhaps good commentaries, perhaps advice from other faithful pastors. Those are all good things to use. AI is not. The reason for that is because AI is governed by sinful humans. So if you're going to see an AI created by communist Chinese people who most of them probably don't believe in God, don't be surprised if the AI reflects that as well. And we saw that with ours as well. Good stewardship issue, folks. Reminder to be a good steward of everything that you have, because indeed everything you have belongs to the Lord. Good place to end today. It was a great show for you, folks. I hope to see many of you on Bible study tomorrow. And then for Rapid Fire Friday, of course, make sure to get your calls queued up early in the call queue at 610-363-1110. We'll see you tomorrow, God willing, for more financial issues. Have a great day.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.